What's up, everybody? Jay Martin here, and my guest today is Mark Yaxley, the Managing Director at Strategic Wealth Preservation. Now, this video is a great video to watch if you are not a gold bug, but you're considering owning gold, or you're not a gold bug and you're wondering why you might want to own gold. We really get into why I own gold in this video and why Mark owns gold in this video. And I'm not a gold bug. I own Bitcoin. I'm super heavy in speculative equities. I own real estate, but I also wouldn't consider not owning gold. And I expect to continue to buy gold for the balance of my life. And in this video, I get into why, and Mark gets into why. So this is a super fun discussion. I really enjoyed having Mark on the show. I hope you enjoy it as much as I did. And as always, if you dig my content, right beneath this video, there's a pinned comment where you can subscribe to my weekly newsletter where I debrief conversations just like this and plenty others, share my key takeaways, lessons learned, and most importantly, any action I might be taking in the market as a consequence. Now you can also find us on Spotify and Apple Podcasts. Just search The Jay Martin Show and we'll pop up there if you prefer to listen instead of watch what we do here at Cambridge House. Okay, Mark Yaxley, enjoy.
What I love to do is introduce the right people to the right people. I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
All right, what's up, everybody? Jay Martin here, CEO of Cambridge House, and I'm joined right now by Mark Yaxley, the Managing Director at Strategic Wealth Preservation. Mark, how are you?
Jay, I'm very well. Glad to be here with you.
I'm glad you can make the time. It's fun to reconnect because, yeah, right before I hit record, you reminded me that we connected back when you were at Kitco, like what would have been a decade ago, right? So it's good to reconnect. Now, where I like to start these interviews typically is getting a temperature check on like where you're spending your time and attention in the macro finance landscape, and then just start pulling on threads. So what's catching your attention right now, Mark?
Well, I think the obvious headline right now, Jay, is the Fed, and they're hinting at the possibility of tapering their bond purchasing program, basically propping up the U.S. economy. But I'm not, I don't spend a tremendous amount of time, focusing on these kind of short-term events. I think when you talk about gold and silver, which we'll get into a little bit later, you really have to think long-term. So I don't spend a tremendous amount of time there, but that is what I was taking a look at this morning. A little bit closer to home, I am paying attention to our Canadian government's overspending, and the tremendous amount of debt that they're building up. That's obviously very concerning as a taxpayer here in Canada, but also as an investor and a citizen of the country. Really the thing that's top of mind, though, mostly these days is the variant, the COVID variant, because as you know, the gasoline on the fire during the last bull run for precious metals actually was the virus. It created so much uncertainty in the market, and that drove a lot of investors back to gold and silver after 7 or 8 years where nobody was paying attention to the metals. Yeah, and so I'm really paying attention to see if the variant is as serious as people say it might be, and if the results are going to drive us back towards a second bull run here.
Yeah. Okay. Fascinating. Now, you mentioned the 7 to 8 years when nobody really cared about precious metals, and you were running Strategic Wealth Preservation during that time. So I'd love to get into just, what is SWP? What do you do? And why does this company exist?
That's a good question. Why do we exist? Why did we do this? Why do we do this every day? So we started SWP back in 2014. At the time, my partners and I saw the need for an offshore storage facility and precious metal dealer closer to the North American market. So a lot of people, when they think gold and silver and they think about positioning metals offshore, they're thinking about Zurich, Singapore. Those are kind of the two big hubs that emerged in the late or early 2010s. And we saw an opportunity to service the Canadian and US markets a little bit closer to home in a country that, the Cayman Islands, it's very well known for wealth preservation, wealth storage, you could say. Yeah. And so we started up SWP, and basically we're a retailer of precious metals and a secure storage facility. So we're right at the end of the supply chain, which leads us to see a lot of movement and action within that supply chain. And, because we're at the very end of it, we're sometimes on the receiving end of everything that's been going on there, which is interesting. But it also alerts us to a lot of trends within the retail space. So what are retail investors doing? What are they thinking? How are they behaving? Are they going to crypto? Are they moving into equities, out of equities? So we have a lot of those kind of conversations every day.
Okay, well, I want to pull on that thread. So, that being the case, what are you seeing in the retail market right now, Mark, when it comes to either precious metals ownership or a shifting of wealth from precious metals to crypto, anything like that? What's catching your attention?
Yeah, I mean, if we go back about a year, just to give a little bit of context, the trends that we started to see were obviously a lot of people piling into gold and silver. You had your gold bugs that are always loyal to metal. They had been waiting for an uptick or a new price range, which they finally achieved, which gave them a lot of optimism and encouragement. And so they kind of stepped in and purchased more precious metals or repositioned precious metals within their portfolios. But the trend that was kind of surprising to everyone was the number of younger investors that were purchasing gold and silver for the first time. They were looking for some safety, some security, probably because they lived through the financial crisis in 2008, but they were too young to really have any money, to lose at the time.
Sure.
But this was a different story now. These are young professionals, people in their kind of late 20s to mid 30s that have built up a little bit of wealth, and they're thinking about how they can protect it while still achieving a gain. So we saw a lot of those people step into precious metals. But what was probably most interesting for me is a lot of these first-time buyers weren't just taking home delivery, of small amounts. They were actually going offshore and spending money and investing in gold and silver in Cayman and Singapore and New Zealand, because they really have a pretty severe distrust for government and the banking system. Hence why crypto was so popular as well, or is gaining in popularity. So kind of an interesting social trend there.
That's really interesting. And honestly, I find it a bit surprising and simultaneously encouraging. Like, I feel like that's really good news. One thing that occurred, in spring of 2020, when, the sky started falling and we started realizing what the implications of a global pandemic were going to be. And a lot of people got rocked. A lot of businesses got rocked. A lot of individuals got rocked. Income shut off, like really devastating scenarios. You always try to find the silver lining, like what's the silver lining here, right? And one could have been that individuals realize the need for personal sovereignty and that you have to have your own back because anything can happen, right? And trusting, a pension plan or an insurance policy to have your back probably isn't enough. And you need to take control yourself because black swan events can happen to you too. It's funny because and I was curious, like how much of that took hold because, gratefully, I suppose, programs swept in immediately to rescue people, restore income, provide subsidies to small business, which is a nice safety net to have. And we're really fortunate to have those, but it can also create a false sense of security that that's always going to be available. And that black swan events can't hurt you because someone's always going to come to the rescue, which isn't, I believe, a healthy mindset to have. So what you're telling me is that there was a population of people in a younger demographic that recognized that and took some action steps. Now, can you share any numbers, Mark, like demographic, age, or like what kind of metrics do you watch when you say there's an increase in that activity among that demographic?
Well, we obviously, for our own business, Jay, we monitor, our average client age, our average client spend per demographic or per client age demographic. So we did notice a shift in the average age of our client decreasing. We also, obviously, these younger investors aren't spending as much money, but we noticed we were receiving a larger volume of small orders. And when we went down that rabbit hole, that's when we discovered that we were noticing these younger investors coming to gold and silver. And I think if you really wanted proof that movement exists, you don't have to look that much further than Wall Street Silver.
Sure. Okay.
And, Wall Street Silver is kind of controversial in the sense that they kind of started, they started out to try to squeeze out the big players out of the market in their short positions. And I personally don't think that they've achieved that or they necessarily will achieve that. But why I do like this group is that they've created a community of like young, energetic believers. Again, we always had the gold and silver bulls in the background that were always, stacking metal.
Sure.
But this is the first time in 16 years that I've worked in the industry that I really saw a community of investors come together and really start rallying around a cause. And I think that was kind of the result of these investors, like you said, that, noticed that something was drastically wrong with the way that the situation was handled, in the sense that it gave us a false hope. And I don't mind having Social Security in Canada. I think it is one of the greatest things that our nation offers our society. But like you said, in discussions with my own friends and colleagues, like it has created this false sense of hope. The Canadian government always tends to make us feel like everything is going to be okay. And I'm of the opinion everything is not okay. It's creating inflation. It's creating massive debt. And the long-term effects of that might be unknown, but I do think that it positions gold and silver ownership very well, because it's not a situation that's ultimately beneficial for anyone. And I think a lot of young people have figured that out, and they're rallying together. And silver, Wall Street silver, is kind of a meeting point for those people. So I think you don't really have to look much further than that. But the numbers, as a business owner, we were definitely noticing a shift in the last year. Now that has changed a little bit. I've been saying recently when asked the question, what are your expectations for gold and silver for the remainder of 2021? I've said, I think people need to have kind of tempered expectations. We had a really good bull run last year. Gold was up like 35%, silver doubled, and everyone's expecting that to continue. It's human nature. Everybody wants, that continuation, that linear return, but I don't think that's realistic coming out of that bull run. We're going to have to wait for another black swan event, another catalyst, more fuel on the fire, which may be the Delta variant. If we have a harsh fall or winter, I don't think the economy, small businesses, medium-sized businesses can possibly survive another lockdown, which will be detrimental to the economy, to the stock market, obviously, or unfortunately, in a sense, good for gold and silver.
Yeah. Right. Okay. So, I completely agree, like how investors succumb to recency bias every single time, whether it's on the heels of a rally, on the heels of a crash, on the heels of a prolonged bull market. We fall victim to recency bias frequently. Okay, so I want to get into the why own gold and silver, because we talked about a lot of the macro forces that are making investors turn their heads that direction. I want to get into the why, because people always ask me why. And when I say people, I mean friends of mine that aren't involved in the precious metal sector. Maybe they have a ton of money in the market. Maybe they trade crypto. Maybe they just build their business and that's their core focus. And when I tell them I do things like buy physical gold and put it in a safe, they kind of look at me like I'm a bit nuts and I must be a gold bug, right? And truthfully, I'm not a gold bug, right? My biggest piece of wealth is real estate. Secondly would be my some equity holdings, but I would never consider not having gold in the portfolio, because you don't have to look far back in history to find examples of maybe on a regular basis, gold doesn't do much for you, right? It's a pretty boring asset class, but there's moments in history that have occurred with consistency where it's pretty much the only thing you want to own, right? And so always have a piece. So when people ask you, Mark, why should I have a percentage of my net worth in this metal? And they don't come from the precious metal sector. What do you tell them?
Yeah, it's a question I've been asked like hundreds of times in my career. And I'm glad you're asking it, because it's such an important question. And we need to tackle this question to educate new investors, friends of yours, friends of mine, the guys that look at us like we're a little bit crazy when we tell them that we're, long in precious metals, or we have some to begin with anyways. So the examples I like to give are examples that people can easily research for themselves. They can open up a chart and they can see this as a fact, as an actual event. It's not speculation. It's not me trying to make up reasons as to why to own gold or sound like I know more than the next guy or my friend who I'm speaking with. Go back to 2008 and open a chart, a 5-year chart starting in 2008 through 2013. And what you're going to see is, and then take any index in the stock market versus gold and silver. And what you're going to see is that the average person during that financial crisis from 2008 to 2013 lost about 40% of their net worth if they were basically, invested almost solely in the stock market, like a lot of retail investors are. My mom and dad are an example I use quite often. Very mainstream investors, always did what the bank told them to do, rely on their pensions, that kind of thing. So they lost 30 or 40% during that time. And what did gold and silver do during that time? Gold was up 140% and silver was up over 350%. So that's a perfect real life example as to why you should hold precious metals in a well-balanced portfolio. It's not to speculate on precious metals. If you're speculating on precious metals, you can make money. I'm not saying it's not a trade. There's a lot of traders that do trade commodities and make money off it, but it's not the ultimate benefit of owning precious metals. You own precious metals because during a crisis period, they tend to gain in value, whereas other asset classes tend to fall in value. And if you want further proof of that, you only have to go back as far as 2020. And when COVID emerged on the scene, everything dropped off in March, February, March, started to see asset prices really taking a hit, including precious metals dropped initially, which is very normal during any crisis. And then gold took off up 35% and silver doubled, in the next 8 months. So it's a little bit less returns, 35% and 100% return versus the financial crisis in 2008. But again, it was a smaller time frame, but the same basic principle is that precious metals act very, very well in times of crisis, whereas other asset classes tend to decrease. That's why you own precious metals. It's wealth insurance. You have to have some in your portfolio for that reason. Yeah, that's my standard answer.
It's wealth insurance. It's insurance. And that's exactly how I look at it. And you're right. Yeah. 2020, 2008, recent memory events where precious metals did what they were supposed to do. And, frequently I think when the same friends I referenced earlier that are like, you actually buy physical gold and you put it in a safe. It's maybe because they see some sensational gold bugs in the media that are calling for outrageous prices and the doom and gloom narrative that sells so well, the fear narrative that sells so well. And it's very similar to, I guess, like the Bitcoin sensationalism that turns a lot of people off Bitcoin, right? The laser eyes, the have fun staying poor. It's easy to look at that as being a bit too much hyperbole, a bit sensational, a bit silly. And as a consequence, you don't take it seriously, when in fact, Bitcoin has a ton of utility and I think is, in addition, an important part of any portfolio, the same as gold is. But if you fall for the sensational fear narrative, it's like, I understand why people think it's a bit weird and too alternative. Talk to me about, I know you hold crypto as well, Mark, or I believe you do. Maybe I'm making that assumption. I've heard you on some other podcasts, but do you tend to compare the two assets? Because a lot of investors do, and it happens a lot on my show where there becomes this like gold versus Bitcoin debates. And I think it's a bit misled, to be honest, but what's your standpoint when you picture these two assets beside each other?
Yeah, I'm happy to say that I own both. I've owned both since, about 2016. SWP's accepted Bitcoin as payment. Since 2017, we were the first business in the Cayman Islands to accept it. So we are not of the opinion that it's a black versus white kind of debate. Whereas, right. And it's funny because it makes me think, like when I was younger in the industry, it was always equities versus metal. It was like, well,
right.
Why would I not buy Apple stock and, or why would I buy gold over Apple stock? That was the old debate. And then like 5 years ago, it kind of shifted to the Bitcoin versus gold debate. And it's funny, I own both. And I don't feel like they're very similar at all. In fact, except for the fact that they're both clearly alternative assets.
Yeah.
And one, gold in my mind represents kind of the historical investment that our society has accepted as a form of wealth or wealth preservation or wealth insurance for like 6,000 years. So that's kind of my old school, like I said, historically proven asset class. And then I've got my new school, kind of an option on the future, as Raoul Pal said it so well in an interview that he did, Bitcoin and or crypto. So I sleep better at night knowing that I own both. My portfolio is better diversified because I own both, but I don't see them competing directly. And I've seen recently, I've been paying more and more attention. They don't correlate one-to-one. Like some people are saying, well, why would you own gold? Or why would you own gold when you could own Bitcoin? They do the same thing. They do not do the same thing. They do not perform the same way every day. And they don't necessarily even perform the same way over a longer period of time. As we've seen recently, Bitcoin took a pretty major hit, whereas gold was flat for, the last 3-4 months. So, I think people need to get over the black and white argument and just accept that there is a place in a well-diversified portfolio for both. You will sleep better at night owning both. And you'll notice that they don't necessarily behave the same way. But I would encourage people, anyone who's not in crypto, like you have to give it some thought. And I know some of these old school, gold and silver stackers are reluctant, and maybe it's because of the laser eyes and some of the nastiness that's taking place on Twitter between the two groups and some of the ad campaigns we've seen from the Bitcoin side slamming precious metals. But if you get beyond all that, I think that you can definitely see some value in crypto. My only warning for people is, being around the space enough and working in the precious metal space and being approached by some companies that are trying to tokenize commodities and such, you have to be selective. Like when you're investing in junior mining companies, you have to be selective about which story you're going to believe. You really have to do your research because there is opportunity, obviously, to make some pretty substantial gains with tokens or altcoins, but there's also the possibility to lose a lot of money or be stuck in a situation where you have no liquidity from what I've seen. So just a little bit of a warning if you're going to get into that space.
That's sound advice. Yeah. And I love what you shared there. Like it does become a this versus that binary argument. And that's such a mistake. And what I caution investors is pay attention to the gurus or the voices that you're following, specifically to their brands. So many of the personalities in financial media have the name of a commodity or the name of an asset in their company brand, which is great. It's a good representation of what they may do. You know, I am the Bitcoin this or the gold that. But as a consequence, you're probably only going to get that side of the argument from that individual. And so make sure you find the opposing and the counter argument, right? And don't fall for those narratives. Like, you know, I think you said you need to go beyond it. You need to go beyond that, the sentiment of, you know, it's gold or nothing, it's Bitcoin or nothing from the Bitcoin maximalists, or the old school gold bugs won't look at anything else. Be more moderate in your approach. Listen to both sides, and I think have a horse in both races, because yeah, you can't compare a 12-year-old technology to a 5,000-6,000 year store of wealth. It's like, would you compare land to Facebook stock? Like, probably wouldn't do that, right? It doesn't make sense. They have different purposes in your portfolio, and maybe you want both, right? So okay. So I want to get back to precious metals ownership, Mark. And I want you to talk to an investor who has some money in the broad market. They're hearing and seeing more narratives about this. These prices are too inflated. We keep hitting new highs. You know, I need to hedge myself a little bit and provide some insurance. I've been hearing about precious metals. How do I own precious metals? Where do I start? How do I start? What do you say to this investor?
Well, yeah, you've got three different options. It kind of boils down to three different ways that you can gain exposure to precious metals. You've got the physical metals, which we can talk a little bit more about. I'll kind of circle back to physical metal ownership in a second. You've got the ETFs, or kind of the paper trade that you can own, or you can go with the mining stocks. All of them have, you know, pros and cons. The way that I tend to look at things is that physical metals are what I use for my long-term holdings. It's not the most cost-effective way if you're looking to make a trade. If you're looking for a short-term return on precious metals, buying and selling physical is not the best way to do that. But it is the best way to hold it long-term, because it is considered personal property by law. So once you own a physical gold bar, like you were saying earlier, that you have in your safe, that's Jay's personal property. Nobody else has title to that. There is no third-party risk. Jay has complete control of that physical precious metals, which is one of the reasons that it's great for long-term savings, long-term holdings. Whereas if you're going to trade precious metals, if you're going to come in and out of the market, which I do personally, you know, I tend to use a fund, or you can trade an ETF. Like, I'll use the RBC Precious Metals Fund, which is a really diversified basket of precious metals exposure to trade. You know, if I have like if I have some extra capital and I have like a 3-month horizon, I might go into an ETF or a fund product in order to achieve what I'm looking to do. And then you have the miners, obviously, the seniors and the juniors, and you're much more well-versed over at Cambridge House than I am on that topic. But again, I try to select seniors that are kind of blue chip mining companies and put those in my portfolio for the long term, because if you pick the right company, you've got some great upside there. So those are kind of your three options. Coming back to physical, where do you begin? You know, I always tell people, I say, like, the first transaction you ever make, you should probably go down to your local coin shop and spend like 2 hours, buy the guy a coffee, spend 2 hours talking to him, and you're going to gain a lot of practical knowledge about the products. He's going to pull them out of the drawer or out of the case, show them to you, let you touch and feel. That's going to make you more comfortable with what you're actually purchasing. And then from there, once you've kind of graduated from your first couple of transactions, which will probably be pretty small, then you can go online, or you can go into the big city and look at the vast array of different dealers that are online, and you can compare pricing, you can compare track records, you can see what their service offerings are. For example, do they offer storage? Do they offer home delivery? What kind of liquidity do they offer me on the way out of the transaction? All those kind of things. So start with your local coin shop. And then as you graduate, you're going to want to compare kind of the vast landscape of online dealers that you can buy from. Okay.
And then can you touch on premiums that you might be paying and the spreads on gold and physical silver?
Yeah, that's a really good question. Premiums and spreads. We do a lot of videos on our own YouTube channel about that, because obviously it's something that people have to be aware of. When you purchase a physical commodity, you're not just going to pay the spot price for that commodity. You're going to pay a premium for the manufacturing, for the transportation, and obviously the profit margin of the company that's selling it to you. So, you know, if I was going to boil it down into kind of like 3 simple rules, rule number 1 is when you're looking at gold and silver, gold will generally have a lower premium over the spot price than silver will. So gold products tend, 1 ounce gold products tend to sell at a premium of anywhere between like 3 to 5% over the spot price. And silver products are usually in the range, 1 ounce silver products usually in the range of like 8 to 12% right now, especially they're a little bit high. So a little bit of savings in terms of gold premiums. Obviously, if you're looking at coins versus bars, those are your two format options. Bars tend to have lower premiums than coins, but when you sell them back, they also tend to have a little bit of a lower return. So you really want to compare your total spread. Like, what's the premium that I'm paying up front? What am I going to get when I sell it back? What's the tightest total spread for the round trip when you're looking at bars and coins? And then, the third rule is as you ramp up in size, like if you're buying 100 ounces of silver, for example, do you buy 100 1 ounce silver bars or do you buy one 100 ounce silver bar? And in terms of premium, you're going to save a little bit of money if you go for that larger bar. So if you take those 3 golden rules and you kind of put them together, like the cheapest way to invest in precious metals is to buy gold, buy it in the form of bars, and buy the largest bar that you can possibly afford. I mean, that's oversimplifying the discussion for the sake of time. I mean, you can really kind of dive into each one of those topics and pick away at it. But that's kind of like the 3 golden rules when it comes to buying precious metals. So at least you have a basic understanding of how you can look at premiums and how you can save yourselves a few dollars to invest in more metal to own more ounces.
Okay. And you mentioned you're seeing surge in smaller orders that are still looking for storage, so not receiving personal delivery. What's the advantage, Mark, of storing in the Caymans versus getting it shipped to the US, Canada, Europe, wherever you live?
Well, I mean, look, it's kind of it's a little bit of a journey. Most investors are going to start out by taking delivery at home. Like I said, you're going to go down to the local coin shop. You're going to buy a couple $100 worth of stuff. You're going to take it home. You're going to do that repeatedly until you get to the point where you might have like $10,000, $20,000 worth of physical material sitting in your house, which your insurance company is not going to insure, most likely.
Yeah.
So once you get to that point, I always say people ask like, when should I go into storage? I'm like, well, when you start losing sleep over it, it's time for you to consider storage. Before then, you're fine. If you're willing to take the risk that if someone breaks into your home or you have teenage kids that, manage to get their hands on your stuff and go pawn it for God knows what, as long as that's okay with you and you're not worried about it, then storage really doesn't enter the conversation. But once storage does enter the conversation and you're like, okay, I've accumulated enough that I want to move it into a physical facility that has insurance, that's built, to store this kind of product, not have any burglaries, obviously. And it's, it's safe against fire and theft and all those things that we worry about in life. Once you move into that frame of thought, then the question becomes, where is the best place to put it? Is it a local depository, somewhere that's close to home? Or should I have some of that money maybe offshore in a jurisdiction that isn't exposed to the same type of risks that my home jurisdiction might be? So and there's such a range, Jay, of concerns. Like some people are concerned about like government overreach, privacy, physical security. Like if you live in a second or third world country, like physical security is actually something that you and I as Canadians might not worry about as much, but I might worry about government overreach or even the lack of privacy from my government. So I might look at a jurisdiction like Cayman, for example, where privacy is highly valued. You don't have a lot of crime. It's a very stable place that really its lifeblood is wealth preservation and the storage of wealth in different forms for individuals. So that's why you start thinking about diversifying into offshore jurisdictions. And there are a number of good ones out there, including Zurich, obviously Singapore, Cayman being one of them. And that's really when you start to have those thoughts. So you start doing research about those different places and those different options at that point.
Okay. Now, correct me if I'm wrong. I believe you were quoted recently as saying there will be a time in 2 to 3 years when it's time to sell your gold and silver. So talk to me about what you expect to occur in that time horizon. First of all, is that correct? Tell me if it's not. And then secondly, what do you expect to occur in that time horizon? And what will you be looking for, Mark, to know that you're close or on the right track? You know what I mean? And that thesis is proving true.
I probably did say that. And it sounds like me, because I think one of the biggest mistakes, Jay, that precious metal investors make, and you've met a lot of them, so you know these guys and these ladies, they tend to be so loyal to precious metals because it's such a comforting investment to have in your portfolio.
Yeah.
And I'm also somewhat guilty of it, but they tend never to sell. I've had many clients over the years that, bought silver at like $5 an ounce. It went to 50 in 2011 and they didn't sell a single ounce. They had made 1,000% return on an investment and sold nothing. Mm-hmm. Then it crashed, came all the way back down to $9. And they're like, I probably should have sold. Yeah, you probably should have sold. And that's the mistake that a lot of precious metal investors make is they don't look at the exit strategy. They're afraid to take profits. You should never be afraid to take profits. It's always good to take profits. There's always other opportunities, other undervalued asset classes to transfer that wealth into and vice versa. Just play that game. That's how you accumulate wealth. And you know that as a good investor. So that is one of the biggest mistakes. So that's something I try to bring up when I talk to people. It's like, hey, like it's okay to take profit. And I think you touched on it earlier and it really strikes a chord with me. One of the other points that bothers me inside of the precious metals industry is all these newsletter writers that say, oh, silver is going to be $300 an ounce and gold's going to 10,000 or 100,000. They make these false promises based on, nothing but speculation. And it's unfortunate because
it's good for business too, right? If you're in the business of selling a gold newsletter, what are you going to say, right?
Exactly. And that's why they do it. And that's why I try to tell people, I'm like, yeah, this guy has an agenda to sell headlines. I mean, this is what he gets paid to do. But the problem is that investors listen to him and an investor will say to me, well, why would I sell my silver at $50 an ounce when I'm going to get 300?
Yeah.
I'm like, well, yeah, it might happen one day, but we have no clue when. And it's an awful long way off from $30 an ounce. So going back to the initial comment, I think people just need to be open-minded to the idea of taking profit. And personally, if I'm buying silver today at like $24, $25 an ounce plus my premium, hey, look, if I make 30%, if it goes up to $35 an ounce, $40 an ounce, I'm a seller. I'm going to sell a fair portion of my silver, take profit. I'm always going to have some in my portfolio. Don't get me wrong. I don't sell it all. I'm not the Canadian government liquidating all of our gold and silver in the vaults. But
yeah,
I think people have to be open-minded that I'll definitely take profit at $35, $40 silver and gold. If it hits 22, 2,300, I'm definitely selling some as well. And then because I know it's probably going to pull back down just like it always does. It has that bull run, it pulls back down, then you stack up like now is the time to buy $23 silver. $24 silver, you should probably get some. $1,800 gold is a fairly good price. Yeah.
It's interesting. I appreciate that perspective. And I think I'm probably victim to that, to be honest, Mark. Like I don't have an exit strategy for my physical, right? I'm positioned in a ton, probably over positioned right now in mining equities. And I'm really weighted on the speculation side. That's kind of my game. Like that's my world is the early stage stuff. I love it. But my portfolio reflects that. Like I'm heavy in speculation and I'm heavy on the super conservative side, right? We're talking like cash, land, physical, precious metals. That's what that means to me. I actually put Bitcoin in that camp, that side of the barbell, because I dollar cost average in. I don't really care what the price is because it's not a 1 year, 2 year trade. It's like a decade long plan, I guess. Truthfully, Bitcoin confounds me because usually when I buy something, I know what I'm buying. And because I know what I'm buying and why I'm buying, I also know what's going to make me sell it, right? When it comes to Bitcoin, that's not clear to me yet. It's clear to me that I want a horse in the race, but I don't know if I'm buying a speculation. I don't know if I'm buying a future currency, and I don't know if I'm buying a store of wealth. They're three different things, and I don't know which one it is yet, right? It could be all three, right? And truthfully, I think there's a lot of strong opinions, but nobody knows what it is yet. It's too new, right? 12, 13 years isn't enough of a track record to prove that, right? We'll learn what it is in the future. Maybe it's none of those things. I don't know. But so I just hold that one. That's like the one, hole in my game plan, because it breaks some of the rules. I'm not clear on why I own it. I just know that I want a horse in the race. I've got a bunch of ideas why. But anyways, land, gold, cash, different. I'm clear on that. But I honestly plan on holding my physical until it's passed to my kids, right? That's the way I think about it. And I take profits out of the equity side. So I really appreciate your perspective, because it's always nice to hear what somebody else is doing and how somebody else is approaching it, right? So I really do appreciate that. Yeah.
Well, we speak the same language. It's funny. Your approach to investing is almost identical to mine. I look at it the same way. Bitcoin, I feel the exact same way. I can't really explain to my wife why we own it, but I'm like, I'm glad that we do. It's like one of those. I'm like, don't ask too many questions, but I'm glad we have this.
Yeah.
But you're right. And I think in your case, because you have such great exposure on the equity side, on the mining side, that gives you a lot of liquidity and a lot of option to take profit out of your precious metals, kind of portfolio, your overall portfolio versus selling your physical, which actually is a really smart approach. But I tend to, a lot of our clients either don't tell us about their equity holdings or they are just long physical. So that's my commentary was a little bit more along those lines, but I'm definitely learning from you as well. I need to diversify a little bit more into the equity side of the picture. So it gives me more liquidity and I don't have to sell my physical. And passing it down to your kids, listen, like that is probably the greatest gift you could ever leave a child. They won't understand why for an awfully long time until they're probably into their late 20s, early 30s before they have appreciation for what gold and silver actually is. But I see it happen in our business. We have, fathers setting up trusts for their kids and setting up different accounts around the world, in Liechtenstein and in New Zealand and Cayman and diversifying the metals there. And I'm like, wow, what an intelligent person. They've done a huge favor for their child. It's just absolutely incredible.
Yeah. Yeah. And it comes down to bandwidth too, doesn't it? Right? Like you can only hold so many things and have a strategy for so many things. And so if I can just have my physical ownership strategy be real simple, similar, I just dollar cost average in, every couple months. I don't worry too much about the price. And then I just know over the course of my life, in slow increments, I will continue to build that pocket of wealth, right? And if the sky fell today, do I have enough to retire? No, I don't, right? But it's not a 1 year. In 10 years, I'll feel a lot better than I do today. In 5 years, I'll feel better than I do today because it's just that consistent drip into that piece of the portfolio, knowing that it will build if everything goes to plan over the course of my life. And I'll never have to withdraw it, right? Yeah.
And that's what I love about gold, Jay. Aside from being in the business, selling it, I can sell anything. That's not the point. But as an investor, what I love about gold is it's so predictable and it's so reliable. And it's like you said, I don't worry about it. Most days, this sounds crazy. I've worked in the industry a long time. I don't even look at the price most days. I don't care what the price is. It means nothing to me because I know in 5 years, 10 years from now, the price will be higher than it is today. That's all I need to know.
Yeah.
And because the world isn't going to change, human nature isn't going to change. There's always going to be crises. You did that interview with Stephen Harper. Just brilliant. The guy knows. He's like, yeah, we're in trouble. There's more crisis coming. And in this case, it's coming sooner than later, but there will always be financial crises. There will always be something to worry about. So there's always place for gold, and a lot like you, I just don't worry about it.
That's the thing. There will be more crises. And so, I don't hold it for what may happen in the next year or 2 years, but I hold it because of what could happen in the next 60 years, right? And I plan on living that long, so I want to have that insurance policy. Now, you referenced the interview with former Prime Minister Stephen Harper. Were you surprised, Mark, when I asked him, do you own any gold? And he said no. Did that surprise you? Because it surprised me.
It surprised me because the rest of his answers in that interview would have led me to believe that he would be open to owning gold because he was very forthcoming about the troubles that Canada is not just Canada, but you focused on Canada, obviously, because of his role.
Yeah.
But, it was a pretty sobering interview. And you would think, he might be open to the concept of owning gold. But that being said, I know for a fact that only about 3% of the general population actually owns any physical bullion. So Stephen just happens to fall into the 97% on this one. And so I'm not surprised from a statistical point of view. There's very few of us that actually own physical gold and silver. So in that sense, it doesn't surprise me, sadly.
3%. Yeah, that's fascinating. When he said no, I kind of wondered in the back of my mind, I was like, maybe the answer is yes, but you can't say yes because, Canada doesn't own any, right? And you had to support that strategy. So personally, maybe you reflect that. I don't know. I'm speculating. Anyways, he was great, by the way. Phenomenal interview. Okay, so 3% of the world's population right now owns physical. That's correct as far as you know. Is that above or below? Do you have like a multi-decade average, Mark, that we could say this is above or below that number?
I don't have a kind of running tally. What I can tell you is, not surprisingly, per capita, the country that owns the most in terms of bullion are actually the Germans. Based on their history with war, they refer to it. They have a term. I was living over there. They compare it really to real estate. It's like shiny concrete, they call it, or something along those lines. So it's like real estate, gold, and cash. I don't know where that they've had some bad bad luck with cash in their history. But yeah, Germans actually hold the most physical gold per capita. The Chinese are up there in the top 3. Americans and Canadians actually significantly, surprisingly pretty low, even though, a lot of metal is sold in the United States per capita. It's fairly small holding. So again, we talk about things like Wall Street Silver, programs like this, where we talk about precious metals. The hope is that more people will discover the benefits of gold and silver and realize just how easy it actually is. It's like, I always try to tell people, it's one of the simplest things you'll ever invest in. Once you have that basic education, that basic understanding of how buying gold and silver works, it's so easy, and you will sleep better at night knowing that you own it. So
I agree. That's what it's all about. Sleeping better at night. It's that's what it does for me, honestly. Same with cash, same with my house. Okay, look, Mark, this has been super fun. I'm really glad you could make the time to come on the show. It's been great having you on. You know what? We're coming back to our first physical event in what will have been, 18, 24 months, this January, January 2022 in Vancouver, BC. And I'd love to have you come out. So I'll send you all the details and love to have you there, man.
Jay, I would be absolutely thrilled to come back. I haven't been out to that show in way too long. We used to do it all the time with Kiko. I live just down the road in Golden, BC. So we'll definitely make the drive and would love to participate. It's so good to have these physical events coming back to life now, because you can't replace, unfortunately, like Zoom is great. We can't replace the handshakes and the cocktails afterwards with
totally just the excitement. I love the buzz. Yeah. Okay. Well, thanks again, Mark. I appreciate it. Love to do it again sometime.
Great, Jay. Thanks for having me. It was a pleasure.
As always, if you enjoy this content, please hit subscribe. I'd love to have you on the team. And if you want to take the next step and go a bit deeper with my content, I publish a free weekly newsletter every Friday where I debrief my portfolio. I distill the top lessons I've uncovered from the guests I've had on this show every week. And I talk about sectors and industries that I think are poised to move, areas I'm looking for opportunity, and places that I'm allocating capital. I love writing it. We publish every Friday. The link is right beneath this video. Love to have you join the tribe.